Welcome, everybody, to the latest episode of Duck the IRS podcast. I'm your host, Parham Khorsandi. Got my main man, my partner, Amir, over here.
What's up, P?
What's up? So we have a interesting but controversial topic for our industry, which is estimated tax payments.
Oh, paying taxes. Okay.
Paying taxes, yes.
Very controversial.
And especially for a lot of our clients that have never paid taxes or
haven't for a long time.
Haven't for a long time, or they're not used to it. You know, they think that they're making money and it's all good and they're spending money on their mortgage and tuition and all these things. And they kind of forget that there's this huge obligation to actually pay the taxes.
And life, your expenses that you've taken on are based on your life, so you're not factoring in the taxes that you have to pay on it. So you've made all these promises and taken on all these responsibilities expense-wise that are not taken into consideration paying the taxes.
Yeah, because if you're supposed to pay, 15% in taxes, imagine if you had 15% more money all of a sudden and you would just spend that money. But, that money is supposed to go to taxes. 15% is a conservative estimate. A lot of people are paying close to 30 or 35%.
Yeah. It's a lot of money.
Yeah.
And it could add up quick.
A lot of money that they're not paying that adds up quick, and then they need our help. So let's explain a little bit about what estimated tax payments are. So if somebody is a W-2 wage earner, an employee, they have their federal withholdings taken out of their paycheck, their state withholdings, FICA, which is Social Security, Medicare. So really, as an employee, if you have the proper withholdings, most employees don't really have a tax problem. There's not a situation where they owe a lot of money to the IRS because the taxes are being taken out of their paycheck by their employer.
Yeah, usually it's not a responsibility that is theirs. And
the
so
employees,
it's easy, the employees, so it's easier to be on top of the taxes. In that situation, usually some people are going exempt. I see that a lot. They need to catch up for like one or two bills and then they forget, or they take out money out of a retirement. There's different ways that employees get kind of caught up in tax debt. But you see it less, or it's a lower amount of tax bill because there is some tax being taken out by their employer. So these are not the people that would be making estimated tax payments necessarily.
Correct. So these employees, most employees, if you're not going exempt and you have the proper withholdings, you're paying your taxes. It's coming out of your check. We all feel it. It hurts. You're expecting $1,000 check. It's only $620, and you're like,
and then you get a refund, which is nice. It's better to get refunds than owe, for sure.
So then there are other people that we put in the category of self-employed. You're a sole prop, single member LLC, you're some type of business owner. You could be an employee and a sole prop business owner, self-employed, but that portion where you are self-employed, making your own money, nobody's taking taxes out for you.
Right.
So the responsibility comes to every single quarter to make estimated tax payments for the current year we're in. And for example, we're shooting this in 2024. And so if somebody is a painter and he made $60,000 doing painting jobs, he spent $20,000 in some business expenses, and he made $40,000. Well, he has to pay tax. He has to pay self-employment tax. He has to pay federal withholdings, state withholdings. Unless he makes those estimated tax payment, that guy, when he files his return, he's going to owe a good amount of money to the IRS.
Yeah, and I think ultimately the estimated tax payment is basically paying that tax, but doing it in 4 increments rather than just all at once at the end. Because for most people, if you spread out a bill, let's say it was $5,000 over 4 payments, what is that, $1,250 throughout the year.
Yep.
Versus, hey, by the way, you owe $5,000, you got to pay it tomorrow, because most people are preparing their taxes at the last second. And I personally recommend that my clients make the payments monthly.
Monthly, absolutely.
So that the smaller the payment feels, the more likely that it'll get made, and that they won't fall behind. But, unfortunately in this case, it's 1 year, 2 years, 3 years, 4 years where the idea is that you're going to catch up, and instead of focusing on looking forward and not worrying about the back taxes and letting somebody like us handle that, people get caught up in, I'm going to catch up. I'm going to catch up. I just need more time. And this idea of being able to catch up is really what's setting them further back.
Yeah, and a typical situation is you have somebody who's a wage earner. He leaves his job to start his business, and let's say he was making $100,000 a year as an employee somewhere, leaves, and the first year when he's on his own doing consulting, whatever, he's self-employed, he makes $60,000. And so he was living a lifestyle of $100,000, but now he's making $60,000. So, he's like, okay, I know I have to pay my taxes once I make a little bit more money.
Right.
Then the next year he does make $100,000, but he still doesn't pay his taxes or pays very little. And then you see this spiraling where even when he starts to make $200,000, $300,000 a year, which is way more than he was making before, he has now gotten comfortable not making any estimated tax payments, not paying in the current year that he's in, and ultimately going to get hit with a big fat bill and becomes a client of ours.
Yeah. Yeah. I think the key, and I always say this to my clients, is the problem is not that you owe back taxes, right? That's a byproduct of the problem, which is that you aren't paying the taxes. So what's done is done on the old years. I mean, even if a client came to us today and they, 2023 tax return extension is due in a few weeks?
A few weeks, yeah.
But we're already almost 10 months into 2024. So that's going to be another bill next year if they haven't made estimated payments. So, you have to talk to somebody that knows what they're doing to figure out how you can clean up this mess in the best way, right? Some people are like, no, I got to catch up. And it's actually, I would be of a different mindset. I would say, look, focus on next year.
Yeah, absolutely.
From January 1st going forward, start making estimated payments. Estimated payments is the key to the success of the whole case. Because if you don't do it, you're just going to be a client forever.
Yeah, and Amir's absolutely right. We have clients that they owed a bunch of money. We set them up on a fantastic resolution, whether it's a really small payment plan, offer and compromise. We tie a bow and we say, here, client, you have this perfect resolution, and all you have to do is not owe again. And then a year later, 2 years later, we recognize that phone number, it pops up, and you're like, why is this guy calling me?
Please tell me
yeah.
he didn't know, please. And then you
talk to him like, hey, what's going on? He's like, hey, what you guys did was fantastic. You guys are the best. But let me tell you, I got this letter that says all that money that you had saved me is coming back now because I owed for another year. And as much as we love new business, we don't want recurring clients. We don't want our clients to be clients here forever and continue paying us. We want to finish the job, but if you continue to owe, you can't get anything done. You have to stop the bleeding. And we tell our clients all the time, stop the bleeding and make sure that you don't owe moving forward. Whether that's 2024, whether that's 2025, and there's a strategy behind all that, you have to get used to making estimated tax payments, especially the way that Amir said, on a monthly basis is the best way to do it. Or we have real estate clients. They say, how can I make payments on a monthly basis? I get paid commission. I'll get a check once every 2 months, once every 3 months, twice a month. Check. Yeah, and we say, whenever you get a commission check, if you're commission based and it's really sporadic, whenever you get the check, shave off 10%, 20%, whatever
just
that percentage.
Make a payment.
Shave it off and send it to the IRS. That way, if you have a bad month, you pay very little. If you have a good month, you're going to pay more.
Yeah,
it makes sense.
It'll be based on what you're earning. Look, we are aware of how hard it is to kind of get back on track with this. And we, our initial consultation is always, are you making any estimated payments? Where are you at right now? How can we get you on track? No, don't pay the old stuff. Pay your current taxes. And, the IRS wants to get paid what they're owed. And estimated payments are a key for a variety of reasons. I think 3 main reasons. 1, so you don't owe again.
Yeah.
So you can get a resolution and stay in a resolution. 2, it's an expense.
Yeah.
Right? So if they're asking you to pay your old debt versus your new debt, your old debt has already got penalties on it. It's already got a statute date.
Yeah. Which
right?
means it'll expire at some point.
Which means that debt will expire at some point. There's a light at the end of the tunnel on that balance, but not on the one that you're going to owe for next year.
Yep.
And then finally, you need to make sure that you get rid of this problem for good.
Yeah.
And you can't do that unless you're making the estimated payments. That's if you're self-employed. Now, if you switch jobs, that's a different story. Then you go become a wage earner and let somebody else deal with that, right? But estimated payments is just so crucial.
And I feel like a lot of people in our industry don't really talk about estimated tax payments.
No.
We'll have a consultation and they'll be like, oh, yeah, you're the third person that I've talked to. This all sounds great, but nobody has told me about, because, a lot of other places, they like the repeat customer. They want them to default.
Yeah.
They don't care that they're making estimated payments. We are really trying to educate our clients to say, look, this is the reason why you got into this mess. Yes, let's clear it up for you. But number two, and sometimes even more importantly, how do we avoid you from being back into this situation again?
Yeah, I think, look, if you're selling something, which is a service, you don't want to bring an added responsibility, right?
That's a good way of thinking
it's an anxiety that they have to deal with the back taxes, and now you're saying, well, you got to be responsible going forward to pay your taxes too, and that's why a consultation with us or with our firm is different, because we're realistic. We want the right outcome. We don't want to just sell whatever you want to hear. We want to tell you what you need and what's realistic. So a lot of times I think that's why people don't share that.
Yeah. And what I tell my clients on the consultation, I say, look, dealing with the back taxes is the easy part. We'll file your returns. We'll put together a financial package. You'll be on a low payment plan, or we'll do an offer and compromise. That's the easy part. I can do all of that. I don't mind it. The hard part now is you have to pay your taxes.
We can't pay your taxes for you.
Yeah, we can't pay your taxes for you. Exactly. So what we want to make sure that they do is they're the ones paying the taxes, and they understand that they have to do that, because if not, they'll get back into the same situation, and we want to try to avoid that.
Yeah, I mean, there's only so much that we can force the client to do, but if they make their estimated payments, they'll be in good shape. Look, IRS doesn't want to put people out of business. They don't want to take away all your money. That's not their objective. It's people who ignore, or people who are repeat offenders, they call them. They're continuously pyramiding, right? And those are the people that aren't making their estimated tax payments. Once they see you're making estimated tax payments, they're very excited. Yeah. Because they know that this is the step to take to not be, one of the people they're coming after.
And that's a question they ask us. They say, are they in compliance? And we say, yeah, they file all their returns. But then they say, no, are they in compliance? Are they making their estimated payments? And it's a key thing. It's a key thing. And it's really easy to make these payments now. Most of our clients just go online.
Yes.
IRS.gov/payments. They could draft the payment out of your bank account. Limited information you need to provide. And it's very easy. Before, the online wasn't so great. And now you get a confirmation email right away. It says estimated payments right there. It shows up on the transcripts, and it's a lot easier. You could also make the estimated payments via email, via mail, but I don't.
It takes longer. You got to write it on the check, write things. The key about estimated payments is just to get the year right. So right now we're in 2024. You'd be making estimated payments for 2024. Next year, it'll be 2025 and so on. So just make sure that's the right year. Online is the fastest. You get a confirmation. You can see it much more quickly. Mail, you got to mail payments certified. So you got to go to the post office. And so it's a lot easier to do it online. That's my recommendation. You can even do it by phone, but I mean.
Oh, can you?
Yeah, you think you can call in and get a confirmation number, but I wouldn't recommend it.
I would not do it. Man, try to avoid.
I think it's like regular, just automated is even a whole nother.
Try to avoid calling the IRS as much as you can.
Yeah, I would stick to online, but if you can't do that, you could write a check, and you can get the address on the website on where to mail your check, and you just in the memo section you got to write your social and what tax year you're applying it to.
Yeah, which would be 2024.
Yeah,
in this situation.
Yeah.
So. Oh, I was going to say one more thing, but now I can't remember.
I talk too much. My bad. About estimated payments?
Yeah, it was about estimated payments. You can make the payments online, like we just said. Yeah, I don't
Drawing a
remember now.
blank.
Yeah, drawing a blank here.
We covered a pretty good. I think everybody
Yeah.
at this point you should know about estimated payments.
Oh,
if you
this is
listen
what
to
I
this
was going to
podcast.
ask. I got it. So, how do they know how much to pay? What are you estimating that it's called estimated payments?
It's based on their total tax on their last return.
Right.
But if you have somebody who hasn't filed returns in several years, then you got to go based off the percentage of their income.
So, what the IRS wants you to do is pay the taxes that you owed last year as an estimate of what you're going to owe this year. So, if on your 2023 tax return you owe $10,000 in tax, they want you to make $2,500 quarterly payments in 2024. But not everybody, especially being self-employed, not every year is going to look the same as
it's
the
up
next.
and
It's going to
down.
up and down. So you have to fluctuate. If you made more than last year, you're going to make a higher estimated tax payment.
Yeah.
If you made less, you can make less.
So it doesn't have to be that. That's just a guide.
Ultimately, it's just getting into the habit of making
Yeah.
tax payments. That's what we really want for our clients.
Even if you fall short, as long as it's just a little bit, so you can catch up.
Yeah, because most of our clients are not paying their taxes and they're not used to it and they don't understand how to do it. So if we could leave you with anything, it's going to be if you're self-employed and you're not making estimated tax payments, don't worry about how much. Don't worry about what the right amount is. Just really try to get into the habit of doing it on a monthly basis and making your payments, because once you go to file your return, you'll have a lot less anxiety, you'll owe a lot less, and it'll be a lot easier to digest.
Yeah. And ultimately, you're at least moving in the right direction with handling your taxes.
Yeah,
So-
absolutely. All right, great. Guys, estimated tax payments, very important. Parham Khorsandi here with Amir Boroumand, my main man, my partner. And we will catch you guys on the next episode of Duck the IRS podcast. Hope you guys are learning something.